You win a few trades here and there, but every so often you end up in a losing streak and you are unsure what is causing the issue. You see all these traders on social media making huge returns, but for some reason you can't have the same breakthrough. Well, I will tell you the secret. You have learned how to identify the trend, but you have no idea on how to properly time your entries and exits. How many times have you entered a trade and it runs to your stop loss, but right after it turns and runs deep in the direction you anticipated, and you watch as all the potential profits slip away? Your mentor might have told you to use the traditional RSI to know when to exit your trades, but what they didn't tell you is that the RSI was created in 1978, it's over 45 years old. I'm going to share with you today a modern and updated way to time your entries and exits so you don't miss out on those profits again. Go ahead and open TradingView. Navigate to the Indicators tab and search for Unveil Open Source. Add it to your chart. This indicator examines how much prices change, smooths out sudden jumps or drops, and then utilizes a special average called Arnaud-Legu moving average. This average is subsequently compared to a range to determine the trend. If we access the settings by clicking the gear icon and moving over to the Style section, we can disable the background plots. This allows us to clearly observe, in comparison to the levels of the traditional RSI, how dynamic these new levels are and how they adapt to the price volatility. This adaptability is crucial because volatility is not static. Let's enable this plot so we can understand how this indicator determines trends. When this plot is above the zero line, it indicates a bullish price trend. Conversely, when it's below, it signifies a bearish price trend. Therefore, a crossover above or below either of these lines can be an indication of a change in trend direction. By re-enabling these background plots, we can also observe how once the price crosses above or below the zero line and starts to trend, the dynamic bands are employed to ascertain if price is overbought or oversold. These levels, being dynamic, allows the detection to be very accurate. If we quickly revisit the settings, we can observe that our initial two options are source and smoothing. The source parameter governs the primary metric employed for calculating the indicator, while smoothing regulates the indicator's responsiveness to price spikes. If I increase this value, you'll notice a reduction in the prominence of spikes at the upper and lower thresholds of overbought and oversold levels. This adjustment can prove particularly advantageous in volatile markets. Moving on, we encounter the look-back window settings, which determines the number of bars considered in the calculations. By default, the indicator is grounded in the calculations of the past 50 bars. Typically, you won't find reason to adjust this unless you're attempting to smooth out price data. Increasing both the look-back window and the smoothing factor can aid in signal refinement. Additional options are available for fine-tuning signal calculations, however, we'll only enable the bar color option in this case. This will enable us to visually observe on our candlesticks when the price is in overbought or oversold territory. Now, as mentioned at the outset of this video, I'm certain you've experienced situations where you enter trades, the price hits your stop loss, only to subsequently reverse and move in the intended direction. I will now demonstrate how to utilize this tool to assist you in precisely timing your entries and exits. This is crucial because what often occurs is that you're entering trades prematurely and exiting them too late. Before we delve into the strategy, don't forget to subscribe to not miss out on future videos, and you can also use the link in the video description to gain access to the Oscillator Matrix, an oscillator developed by LuxAlgo with advanced reversal signals that we utilize in our own portfolio to maximize on earnings in the market. LuxAlgo is one of the top developers of indicators globally. Use the link in the video description to try them risk-free for 30 days. Your support really helps the channel. For our strategy, we will require the addition of another free indicator to our chart. Navigate to the Indicators tab and search for Hypertrend, specifically the one developed by LuxAlgo. Proceed to click on it to add it to your chart. The Hypertrend indicator offers a real-time estimation of the underlying linear trend within the price movements. Support and resistance levels are derived from this estimation, presenting potential trading opportunities within the overarching trend. The slope of the hypertrend can be utilized to discern the direction of the trend, with positions above and below the median line helping to determine whether we are considering buying or selling opportunities. In our strategy, we will employ the hypertrend indicator as our primary tool for trend detection, complemented by the TradingView indicator for executing entries. Our approach involves utilizing the 1-hour timeframe to identify entry points and the 4-hour timeframe to establish the structural bias of a trend. Let's take a closer look at our strategy. It's crucial to pay careful attention here. We will commence by utilizing the 4-hour timeframe to ascertain whether the market is exhibiting a bullish or bearish sentiment, achieved by observing whether the price is positioned above or below the median line of the hypertrend. Subsequently, we will transition to the 1-hour timeframe, patiently awaiting the hypertrend to align with the 4-hour timeframe's trend direction. Moving forward, our course of action involves monitoring for a price retracement that occurs on the opposite side of the hypertrend. During this phase, we will anticipate the price to become either oversold or overbought in accordance with the prevailing trend. Execution will be triggered once the price initiates movement out of this zone, and we will maintain a risk-to-reward ratio of 1 to 1.5. To illustrate this process once more, let's consider an example. If we observe that the price is bearish on the 4-hour timeframe, our next step is to shift to the 1-hour timeframe. We shall wait for the hypertrend indicator on this timeframe to also indicate a bearish trend. Subsequent to this alignment, our attention turns to price retracements that brings it back above the median line of the hypertrend. Once the green candles cease and the retracement demonstrates signs of subsiding, we will trigger our trade. The stop loss will be set above the most recent swing high, while the risk-to-reward ratio will adhere to a 1 to 1.5 structure. In this strategy, the TradingView indicator serves as our guide, enabling us to enter the chart precisely at the optimal point where price is likely to reverse. Moreover, our trading direction aligns with the overarching market trend identified by the hypertrend indicator from LuxAlgo. This synergy forms a remarkably potent strategy. For those who wish to elevate their trading approach further, an additional technique involves adjusting your positions beyond the 1.5 risk-to-reward ratio once a trade has been initiated. Exiting the trade is advised upon the price reaching a significant level of support or resistance. You have the option to draw support and resistance levels from a higher timeframe to identify more substantial ones. Alternatively, you can employ an automated tool to determine these levels. By navigating to the Indicators tab and searching for Order Blocks and Breaker Blocks by LuxAlgo, you can access a tool that systematically identifies advantageous support and resistance levels. This tool equips you with high-quality levels to allow your trades to thrive. Feel free to experiment with this indicator to understand its functionality better. We will delve deeper into exploring the intricacies of this indicator in a subsequent video at a later date. In wrapping up, it's crucial to remember that the art of trading is a continuous learning process. The tools and strategies presented today aim to provide you with a more refined lens to analyze and capitalize on market movements. Here at Switch Stats, we strive to equip you with the very best. Don't forget you can try LuxAlgo for 30 days using the link in the video description, and make sure to subscribe to the channel and turn on notifications to stay tuned for more in-depth explorations in our upcoming videos. As always, trade smart and stay safe out there. Until next time.